Share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video, we're going to talk about the week ahead that has CPI and PPI and talk about how the Fed appears to have won the battle on inflation. Let's get into tonight's video. Well, welcome everyone. It is Sunday night already. It's hard to believe that time is going so fast, and we're already into the mid-year. And it's interesting to kind of look at where we've been already this year and watching how the markets have actually declined over 20%, especially with the NASDAQ. And then ultimately we're seeing the complete rebound. And in tonight's video, we're going to talk about the probabilities of making an all-time new high. And it's been an amazing recovery. I guess there's an old story, don't bet against Trump, because he seems to always come through on a lot of these things and ends up to be right. But the bottom line, what we've seen so far this year is a lot of rhetoric around what I believe is just rhetoric, okay? For instance, because of the tariffs, we're going to see massive inflation, and since then, inflation's down, oil prices are down, everything's down, even eggs. That's a ha-ha moment. But the bottom line is we're really seeing the economy really just flatline. So we're not seeing any great expansion, no big GDP growth, no productivity growth, nothing's happening of that sort. But we're also not seeing deterioration. I had expectations that we were going to see the potential for maybe a surprise on the employment numbers. ADP came in really bad. It turns out that the BLS numbers came in better than expected, right? It's kind of interesting because I was thinking about, it may not just be the Biden administration that cheats. The same people that deliver these numbers seem to be able to inflate them to whatever political party is around at the time. So I still have my doubts about the employment numbers and what they really represent, because I have lost a lot of faith. We'll see if we get our annual update this year, or the audit of the numbers for employment, and see if there's any big changes there. Fair amount to talk about tonight, I think, as we come in this week. Database is getting amazing traction. It's really good. We're continuing. I've run the data sheets here on the S&P, continue to get just bullish numbers. We're trading in 60 handle. We managed to rally back up over 60 and close right at 60 on the cash and just above it on the futures. And right now we're down $1.25. We were down, I think, 10 handles, and we've already rebounded already. We're at 6,005. And we did see a pretty decent surge into the mid 6,000s, almost mid 6,000s on Friday. So just looking back at the employment report, better than expected. All the metrics were basically better than expected by most folks out there, and markets responded accordingly. I'm still seeing some potential, and I will get into more details here in a few minutes from the standpoint of what I think is going to happen with the CPI and PPI numbers as we dig in. I've still seen the potential for a bit of an echo bounce, but I'm going to try to bring up a couple of charts here in just a couple of minutes, so it might be a little awkward transition to get that over. It's kind of a thought that just came into my mind that I should maybe dig into the algos and what they're doing on CPI and PPI. But the bottom line is this week is going to be an interesting week, because we very easily, we had 100-point days. We have a 100-point day where I believe the high was 6160. I'll go through those numbers and I bring up the S&P charts here in a minute. but we're right there, right? And I know probably 2 months ago someone's going to say, "You said this couldn't happen." I did say this couldn't happen, and we just continue to see the short-term database get more and more traction, and now we're seeing the intermediate database get very respectable traction after today's numbers. I'll show you here in a minute. We'll go through that next. But from the standpoint of, let's talk about the Fed and the Fed winning. And I think I talked about this it's probably been well over a year now, but I was giving the Fed an A, and I got a little frustrated when they did the 0.5% drop for in September of last year and I thought that was very politically motivated, and you can see they've just kind of held steady ever since. And we're also still seeing, and I'm going to cover the treasuries tonight, but we're also still seeing on the back end of the curve, there's still some upward pressure on yields on the back end of the curve. So it's going to get interesting. I was talking about dog days of the summer. I still think that's a possibility, even if we do manage to render a new high. I don't think it's going to be a big breakout, although I'm going to preface that with, if we continue to see the type of traction we're seeing in an intermediate database, and I'm going to have to go with the numbers on the database and go with the math. And right now it's getting to be fairly impressive, going beyond what I thought. So that maybe I fell guilty to myself is process over attitude and opinions. I got a little bit of attitudes and opinions going on. I've been frustrated with how the administration's handled the messaging around the tariffs and just about everything as far as that goes. And it's boggling to see how the markets are reacting and responding to all of this noise that's out there. It's just continued to be more positive than anything else. So let's go ahead and set up tonight's video just a little bit here, and we'll go through the typical flow that I usually go through. We'll do the database, talk about the implications of that, and then we'll go through all the indices, and we'll also I think I'll cover the dollar as well as the interest rate. So let's go ahead and get into the database here. Okay, so here we are on the weekly database, and we got some pretty good buying coming in here. We got 1,624 new entries, 106 exits. We pushed the bullish percent, you can see up here, to 47.88%. And it's just amazing, folks. I tell you these numbers, 42, 48, 52, and then we get up into 68, 72. And these numbers, when we break, we were right at the 42. We just went straight to 48, within a couple small percentage points. So the database continues to respond as it normally does. And I mentioned when I was talking to you on Thursday night for Friday's action, is that I did mention that I thought we would see some flow into the intermediate based on the short term getting back above 70%. So let's go ahead and take a look at the daily just for a second here. And daily now is at 75.47. We got some pretty decent buying coming in. Not a ton, but we did get a little bit over 500 new buys and 245 new exits. That pushes us up to the 75.47. So we have 11,047 symbols in trend mode on a short-term basis. So we're also getting at that point. This is what is considered to be the fully invested on a short term. It doesn't mean that it gets there that it's overbought or anything like that. It just means it's fully invested, which means most of the numbers that we'll see over the next several days will be smaller tranches of buys, unless we do break out and we're going to some parabolic move. don't know what would cause that. So my expectation would be that we'll start to stall on the percentages. And what that will do for the trend, it'll keep somewhat of an upward bias, but at least a stabilization at these levels. And I'll explain that when we get into the technicals on the S&P here in just a few minutes. But this is impressive. I want to show you this this map over here real quick. So typically in this position overview, it's right on where my cursor is here. Typical average days long is 39. Right now, current duration is 16. I've talked to you about this before. We're only halfway through this daily cycle, but it can replenish itself numerous times within a cycle and extend out sometimes as much as 90 plus trading days, and that puts us well into 3 months. So here we are. I've been talking about the dog days of the summer, and we're getting lots of traction here. So need to pay attention to what's going there, and the technicals are somewhat confirming this, but also just suggesting that we're really locked into, well, it's positive where we're locked into a pattern that's likely to be more of not a distribution, but a consolidation. I still think we're going to consolidate here, and I'll show you on the patterns here, especially on the weekly. So I'll try to get through fairly quick. We'll get in the S&P. We'll do daily, weekly on all the indices, and we'll get through tonight's show fairly quick. But the bottom line is this is impressive. There's no other way to call it. It is very impressive, and we've got a lot of traction here. And pretty much what this means at 75% means basically 8 out of 10 symbols that are in this database, which are 14,637 of them, are long. Not only long, but that means the probabilities are all slanted to further appreciation. I just showed you the cycle we're at, about halfway through the cycle. And one of the things I did not show you, let me just bring that up real quick, is that the returns, where we are in the returns from that standpoint. Current average profit 5.3, average is 11, so we're about there as well. So there's potential another on that overall database, another 5 to 7% more of appreciation that can happen just out of this current cycle. And like I was just saying, we can recycle, so it could come from the 75 back down to 68, 62, and then replenish again. My expectation and what I was anticipating in this cycle was that we had printed at 72, that we printed a high. Well, we just made a new high on this cycle on the database. So it's continuing. What that means is there's another pullback, and then there's ultimately some kind of failure where the markets start to get some traction back. Maybe we fall back to 64, 62%. And that could be, by the way, another, several weeks. It could be into July when we see that. So, but I just want to set up the expectations for what the flows are going to be. And it's pretty impressive going back to the weekly and the intermediate, that this will actually show us the the potential further rotation here. We easily get to 52%. I haven't run the data sheets, so I built in this is the old dashboard. Hopefully soon I'll have the new dashboard that I'll be able to show you, and this will reflect also some intelligence and otherwise some probabilities on what will happen. So get the Substack, because that report will be in the Substack tonight. And that is kendallreport.substack.com. $8 a month, free trial for 7 days, and there's an $80 option for a full year. So you can get a discount if you pay for a full year. But I'll put all that information in there tonight. I get all this stuff done later in the evening, and most of the time, just so you know, delivery time is somewhere between 2:30 and 6 a.m. Eastern time is when the newsletter comes out. So, okay, just before the U.S. Open. All right, let's go ahead and move over, and let's go to the S&P here. One of the things that I noticed that we're coming into potentially is a potential little mini V-top. And this is my hesitance on the database is telling us it's good, solid foundation. I've talked to you folks about the foundation you need to have with a lot of symbols that are going to get enough traction that gives you a good underlying foundation. So buy the dip still in play as long as we have these kind of conditions from basically from an overall sentiment viewpoint. That's what the database is giving us. But what we're seeing here is a bit of a potential divergence and a potential rejection. We got about, I'm going to call it about an 80% chance of a mini V top here, which all that's going to do is ultimately set us back to the 200-day moving average. And well, that right now, let me just bring up what that number is. The 200-day is 58.28. That would be two handles down. I still think that the way that from a technical standpoint, we talk about the database all day long. It's much different, just giving us that sentiment viewpoint. But we start looking at the patterns here. While we're getting at the higher levels, we've been at this higher end of this range that we've been in. I've talked about it quite a bit going back to mid-May. We're just continuing to kind of chop up against this ceiling, and we haven't been able to break through it. And when we look at things here, we still got not a lot. And let me just bring this up numbers so we can see them. Just trying to get this exact number. I think here it is. Yeah, it was January 24th, 61.62, and we're trading here at 6,000 even. So 160-point rally. We've had days where we've had 160-point rally. So we could be 1.5, 2 days from printing that new high. But from a technical standpoint, looking at the PPMs, they're suggesting more that we have a bit of a potential to stall. And my scenario I keep coming back to, because I go through the database, I see this great traction that we're getting there, but then I get into technicals, and there's that word I use a lot, no VIG. There's no volatility. There's no juice in the market. It's just this tight, ugly range, and this is where I was coming up with the. Maybe just some summertime blues, we'll call it. Maybe I should get that old song out and play it. But that's basically it. It looks like we still have possibilities of being locked in this range. Foundation-wise, database, all that positive. No big declines, nothing big coming on the downside. And the upside, we still need something to grab onto. We can't seem to get any solutions on any of the geopolitical issues around the world, and we're also just still not getting. I mean, there's no deals. Trump is talking about deals. There are no deals. So maybe we'll get something that's material that the markets can hang on to. As far as the CPI and PPI coming out this week, I don't see anything coming out of that. The expectation is for it to be just a slight uptick, I think, in that is starting to stabilize. But I'll go into that more as we get closer to those numbers in the next couple reports that I do. So let's go ahead and go to the weekly. Weekly shows us what basically what I'm talking about here is we have a potential V on a weekly where what this is suggesting that this is the final week of momentum, and you can see everything is down. Not as on the PPM one is pretty drastically down, which tells us that we're going to lose some momentum. And I still think we could come back into this 10 and 20, this juncture here at the 10 and 20. That's 59.75, 59.50 would be that juncture where we could come easily back into these numbers. And the range on the weekly is pretty wide. If we look at the market grid, I just remembered, folks, there's a new function on TradingView. I'm going to show it to you. I haven't used it, but you just hard press here, and it actually, we can now see the numbers easy right on the screen. So that's a nice function. So we're looking here at the market grid, 59.60s right into that number I was just talking about, which would be S1, I believe. S1 would be that number. No, I take that back. S1 is 59.60. This is a weekly. So we're right there. You can see where these numbers are coming in. I wish they'd show me the crosshair value. It is over here. It's right there is 59.75. All of that. So anyway, nice new feature on TradingView. So that's something I've been wanting for a while. I want to try something here. Yeah, it's nice. So now we can get values right here on the PPMs just by clicking and holding. So you left click and hold, and you can get any value where you're at. So that's a nice function. But this pattern here, look at the red dots. It's just flatlining here, and I think if we do get this to be the high this week, that we'll finally come back into this pattern, come back into that 59.50. I don't know that we're just going to break out here. It doesn't feel like it, but anything's possible. The markets, from a feel standpoint, the volatility on a daily has been fairly narrow. It's narrowed down quite a bit, but the weekly patterns are still bullish. There's an upward slope. There's still underlying bullish tone. That's confirmed by the database, confirmed by the values here. If we just look at the value on this PPM here, you can see it's at 1.60. That's a very strong value. That just tells us that the uptrend, everything is in place. So certainly an all-time new high can happen. I would say just be aware that I suspect there will be a rejection off any new high that happens. The initial response will be a fairly decent reaction back into the pattern. We'll see how it all unfolds. I've been talking about it for weeks if it happens, and to me, this setup is pretty solid there. If we just kind of look at the patterns that's set up here right now, you can see it's expanded a little further than I thought. It'd be quite easy to get back into some kind of range that would set up some consolidation. Like I said, during the reverse fundamentals, I don't see the fundamentals behind to make the markets move to the upside right now. So most likely we're going to get more of that consolidation. All right, we'll do top down. Let's go to the NASDAQ and kind of move down from there. Same pattern, NASDAQ. I will show you that we have some Fibonacci targets up here, which would be slightly new high at 23,337. Let's see if this will. Okay. I was hoping it would give me this value here. It is not. But right here, that's 22,285. These are valid targets to the upside. But if you look at red dots here, this is a weekly NASDAQ. It's looking like we want to fade back into this pattern. Everything is still flat. Like I said, let's bring back the indicators. We've got this even a bigger V top right here. And let me, in case you're new around the channel, let me just draw in what I'm talking about here. So this is the V top this on this indicator here, and we got a mini, so it's not clean. What's nice if we had all three of these really up, but we are getting the rollover on all of these. Not so much down here on the 200, but on these top ones here, we definitely have right here. These three right here are all giving us that little mini V, and this is on a weekly basis. So all that tells us we're going to come back into the moving averages if anything happens. The extreme levels here, if we come in, is 22,640 is the top end of the market grid here, 22,449, 22,228, and we're 21,7 right now, so we're a bit away, but there is some upward movement that can happen. It would be natural within the bounds and the ranges of these bars that we've been getting. And remember, a market grid is basically calculating where the market's likely to lie typically. And when I run the sheets, and I just realized I didn't show you the S&P sheet, but it will, let me publish this sheet here on the other side and bring it over for you. And I'll go back and we'll tie this together with the NASDAQ. So okay, so this is the S&P sheet. I told you 85% bullish. It's very similar. I think 90 on the NASDAQ. This was taken, snapshot taken when we were -8. We're now -450, so pretty accurate. Bullish consolidation, basically what I was talking about, above, kind of pausing here. But this is the key down here, is these PPMs. Look at these values again: 31, 58, 25, 30. So we have all of these PPM 1, 2, and 3 are in what I call T plus. If you look at the down here, those are all uptrends, strong trends, and when we get above 0.50 and you get a double plus on the T. So when you look at this sheet, you'll know exactly. These sheets are in every night Substack, by the way. And then let's see what kind of trade setups I got here. S1 entry, so it's saying you buy against S1. I think that may have already hit 54 to 94 to 96. Target 60, 25, 26. And then there's a breakout buy, which is entry above 27, looking for a 45 print. So all the trades that are recommending for today is actually on the long side because of this 85 bull mode that we've got here. Just trying to see if there's anything else that we can. Yeah, so volatility low to moderate. This is pretty much everything we're talking. Indicators all in a strong uptrend. We're hanging around that 6,000 psychological level. All right, so back into the charts again. Sorry, sometimes I get into the flow and I'm ready to go to the next place and I didn't finish my job. So let's go to the daily on the NASDAQ now. Daily has, there's a weekly V pending, which would be for next week, okay? That value is probably not going to change a lot. But if we look at the daily, we have the little mini V's where it's kind of a divergence, just like I discussed in the S&P a minute ago. So we're looking at the patterns here, just coming back in, potentially coming back towards the 200 if we break down. There's no, one of the things that I look at all the time, and I'll talk about this just for a minute, is what if you have expectations, if we're going to go to an all-time high, we'd want to see the PPMs expanding and the forecast for them to expand. We're not seeing that. Everything's contracting on a short-term basis and on intermediate. So while there's a probability for a new high because it's so close, that's why if we do print it, there's a higher probability of a rejection from that point. So just keep that in mind as you're going through it and trading. All right, so let's go ahead and move to the treasuries. And the treasuries continue to really bounce out of this area. We get down, I'm just looking at the levels here. We get down to 432. Man, I like this function already, just being able to pop that up. And then on Friday, we printed to 51 and we closed it on the high of the day. And if we go over to the momentum on treasuries is for higher yields. If we come over here and go to the weekly, you'll see that same thing. We still have another week or two of this. Let me see if I'm kind of curious here. Yeah, so it doesn't give us the forecast value. I'm going to try to fix that because I would like to have access to these values on a data sheet. But we're at 0.59 on the PPM 1. On PPM 2, it's down and it's negative. So we have this basically conundrum of we got positive and negative values. So if I ran a fact sheet on this weekly chart, it would give us mixed results and divergences, and we would have, let me just look here, we'd have one divergence, which would be a negative value within the context of the other values that are on the sheet right now. So there's still, on a short-term basis, still a strong move up. You can see red dots are reflecting possibility getting back up to 461. I'm going to keep my magic number out there at 4.72. If we break above that, then we're probably going to 484 and higher. And if that happens, I don't see the equity markets doing all that great during that period of time. I just don't see that happen. It was funny because sometimes we forget, when somebody's selling a treasury, somebody has to be on the other side to buy it, right? So there's plenty of buyers out there. They're just buyers at a price. And let me put the ZN up here just for a second so you can see what is actually going on with prices. And so we're in this consolidation, and when you invert it a little bit, it doesn't look like there's a lot of downside, as it shouldn't, because there's not a lot of big momentum to the upside here. So just go back to the treasuries. We've got the forecast, but we don't have the momentum forecast to support the higher move here. All right, let's go on to the Dow. Interesting that the Dow is starting to look a bit better here. We're possibly setting up the final low. It looks like we've got some decent momentum. I think all we're going to do is come back in toward this 21. This is a 21-week moving average, probably up around 100, maybe a tad above 100. But I don't see, there's not a big rollover collapse coming. So that also would be somewhat supportive of the treasuries just kind of waffling in here and coming back into staying below the magical 4.72 and just kind of staying in this range, maybe coming back into 430s eventually here. I just don't see anything that what we've been seeing lately is a correlation of the declines in the dollar and the treasuries, which would suggest that there's heavy selling of treasuries and therefore dollars, and that's why they're both moving in the same direction. As it is right now, the Dow looks like it's going to support from here, and then we're likely to see just some normalization. So no, all I try to look for, and I try to give you folks a perspective every day, is where the points are where there's a breakdown. If we start to break much below this market grid, I have to get used to this new function, but that'd be 97.60. If we got much below that range there, then that would start to turn the acceleration and flip this around. The forecasts are not for that. They're for stabilization to the Dow moving higher. Onward to gold, and we'll stay with the weekly gold. This is an interesting pattern. The red dots are suggesting, I've been saying for a while, that we're going to stay above this rising 10-period moving average, and I believe that is the case here. We've got some really monster trends underlying in gold. If we look at the PPMs here, what we're seeing, like I said, even though it shows that the forecast is down in this dip, that's still a plus 25.25. So that's still trend mode, even at its worst value. So that tells you there's basically a 60% probability that we will hold that 10-week moving average during this period. No matter what, there's a little bounce there. And even some of the, if we go all the way out into October, the forecast is for lower momentum, but still positive even then. So expectations would be that we'll probably stay above this 10, continue to go sideways. I've been talking about this pattern that's on here. It's interesting that this week we got the bottom end of the market grid turned up and the top end flattened out. So we're getting, been talking about this for probably a couple months now with you folks, is that normalization of the range. So when you're looking at the market grid indicator, when you start to see, I call them squaring off, we're finally getting to the stage where things are normalizing. And once they're normalized, then we can go to the PPMs and some of the other technical patterns and start to determine directional change in movement or continuation. And that's right now we're still in that final stage of normalization, and all of the trends, especially on the weekly here, are reflecting higher prices. So let's go into the micro and look at the daily on the gold here. So this is kind of confirmational. We've got one of these where we have Fib targets to the upside, and we have Fib targets to the upside. So basically it's projecting a range of a sort. And this is exactly, if we look at the indicators, we're seeing stabilization here. This is the daily. And so there's no big rollover. There's not really a confirmation to hit these lower end of the Fib targets, but we have been here. If we just look here at 3150, we'll call it rounded off. This was the bottom end range over here. And then on the upside, we're looking at Fib target 2 right around the, we're looking at Fib target 2 right around this 3350. So we basically got this 200-point range that we're building in here all the way down to the extreme. So my expectation is that's where we'll continue to stay in that range. Yeah, just 1 second, folks. Yeah, just a couple questions here, real quick. David Ford, shouldn't gold go down if the dollar is going up? It's not going up in a big way. We're talking about 100 points. We're not talking material trends. And you would be right if this was a big forecast, just little, everything's operating within their own ranges at this time. And I see Oleg is talking about will fall hard. That's the gold administration. I'm not sure that's the case. I don't know that. I don't know how you know that. Yeah, must be hanging around the JPM silver guys. Yeah, so there's just let me go back just for a second here. I want to do something. I'm going to back up just based on these comments here. Let's just take a look at. Let's go back to the dollar just for a second. I can't recall. Let's go to a weekly chart just for a second. This is the other thing. The weekly is forming some sort of bottom here, and sorry, this wheel turns too fast. There's still downtrends in place here in the dollar, but all of the algos are being, at least 1 and 2 are projecting to be up, but this 10 week moving average is still going to be like really hardcore resistance on the upside right at 199.50, 99.25. So we definitely can still retest these lows. The red dots on a weekly are suggesting we're going to stay under the 10. It doesn't look like until maybe 1st of July that we could get up to that. So I appreciate those comments. Those are good comments because, this is something to watch. But I don't know about the administration and what they want, they don't want. Maybe Bessett's maybe I watched a fair amount of his presentations he's made, but I'm not sure. I have seen somebody on the channel, and I appreciate it, has been somebody that the Fed has been buying some bonds, and I think they're just trying to normalize any kind of inconsistencies as some of this selling comes in. I don't think it's actual QT. I've been looking at that a little bit. I still haven't got full analysis on it, but it looks like they're just kind of stabilizing, buying a little bit just to stabilize markets if they're getting a little bit out of control. That's the beauty of having the meters inside, and you'd be able to be in a big trading room. And that was always one of the play. I always wanted to be a Fed funds trader in New York Fed, just for experience. It's sort of like being a short order cook. You get to get into the nitty gritty of the grind on a daily basis. But I think some of the buying and some of the things going on there, just some stabilization. It doesn't, they're small purchases on the big scheme of things. So we're not really seeing anything. It'll be interesting. We're 2 weeks out now from the next Fed meeting on the 18th, I think it is. And, maybe we'll get something from there. I don't have any big expectations from that. But thanks for those comments. Those are very valid. All right, so we were on gold. Let's go to Bitcoin. Bitcoin's still struggling here. This is a weekly chart that I've got up, and we're still struggling from the standpoint of not being able to make a clean breakout here. And it looks like I've been talking, we had a few weeks. This is probably the last week or so that we're going to start to lose some serious momentum in the weeks to come. And we could see a break of this 10-week moving average and bring us right back into, 96, just below 100. I think these are very dangerous things to be playing with. And I saw somebody make a comment, if the U.S. dollar weakens, that could put some pressure on Bitcoin here in the pricing. But there's nothing here that is really telling us that, there's any big upside here, which is a little disappointing. There's still probabilities and a bias to the upside for at least another week or so. But it like I said before, it's got to roll. I've talked about these targets: 121, 134. Those are big numbers, and the fact that we were able to print up to 112, but we stalled, is sort of a bad sign, because I feel like the ARBs and all the people hanging around the options and ETFs and futures on Bitcoin are becoming a bit of an issue from this standpoint. So it would be my scenario that I'm painting: if we did come down from here, we'd come back into the high 90s, 96, 94 as an extreme, and then we just get into a longer consolidation from that standpoint. See where we at, 45. So okay, let me just I'll come back up on screen here. Let's see what you folks are talking about. Brad, that's funny. Bob, you finally decided not to fight what the database. Now, I haven't been fighting it. I just, I still don't think, as I mentioned, I get what the database is telling us, but if you look at where the intermediate database is, it's still in the very early stages. Typically, if it gets into what I call trend mode, you're looking at 3, 6, 9 months out. So there's plenty of time to look at things. Meanwhile, not only the database, if you have portfolios built, you're getting buys and you're getting lots of traction. We've seen a bit of traction coming in on things from that standpoint. Yeah, I can see where some of the longer term stuff on Bitcoin, we're just at that point where the short term has to rule here. I'm looking through some comments here, folks, so bear with me a minute. Yeah, I see Snookaroo talking about best wishes in LA. Get off the streets, make it easy. Don't disrupt what's being done there. Get out of the way. That's an easy one. Somebody said Tom Lee. Yeah, I don't listen to what Tom Lee says, but he gets. Usually when he's agreeing with me, he's right. Just anyway. Yeah, I think this is pretty close to the last comment here that came up is when will Bitcoin pass 112? I don't know. It needs to do it now. It's got on a weekly basis, it's got just another week or so of this elevated momentum that it needs to take advantage of. So this could be a nice little hesitation and a blast. But like I said, if Bitcoin is acting as a risk-on asset right now, you're not likely to get any of the, everything's going to have to run, and maybe it's possible. But, this week, if we look at the news, we got CPI, PPI, no big expectations. The Fed's kind of celebrating a little bit. They got things down around 2. It doesn't have to be exactly 2.0, but they've got things down. And I'll cover some things in the Substack tonight that will break down some of these thoughts that I brought up. A lot of times what happens with Substack is conversation I have with you folks here on the live stream every night kind of carries into sometimes, or I re-clarify or challenge even something I said in this video here. So I'll come back and take a look at things and try to reconcile things later tonight. So the two pieces do go together with my live streams every night, and then writing the Substack. Substack's premeditated and thought through. This is really ad hoc. Just it's live. I don't do any of the analysis before I turn on the screen. So we're doing everything together. So appreciate everything. Let me just look here. Yeah, Oleg, I just say market cheap and correlation, big beautiful bill. Yeah, if they get this stuff through, I mean, longer term, I'm still very bullish. But when I did my long term breakdown last couple of weeks, there's lots of challenges out there. It's just not going to be a clean road. I still try to reflect that we had 52.5% 2-year compounded rate of return on the S&P. This year, we're flat, right? We've been down 20 and we're flat, basically flat right now. So this year so far, we're midway through. We've done nothing, okay, from an index viewpoint. The realities is that, we probably have a lot of chop, a lot of challenges ahead. There's a lot of unknowns, and the market, I think in 23 and 24 was able to see at least the inflated numbers that we were getting fed and all the things that were going on from the standpoint of inflation. And this is something I remember being criticized back in 2020, but one of the best inflation hedges, period, is the S&P 500. So I mean, you can just look at the market indexes and see where we are right now compared to even '08, where the S&P is compared to then, and the inflationary bubble that happens. So, I was interesting because I was equating, looking back on my career and what I was doing in 1980, 81. It was pretty phenomenal, the money I was making then. And then it felt like you're making more money later, but actually you weren't making as much money in 81 with the numbers that were being printed back in those days, just because of the constant debasing of the U.S. dollar. So U.S. dollar is a piece of junk. We know that. They just keep deflating it to zero. I think the only thing that doesn't go up in price is flat screen TVs, right? They're down like 95% from where they were 15 years ago or whatever the number is. So anyway, folks, I think we'll call it quits here. 53 minutes in. Appreciate everybody. Get the Substack, okay? And if you don't have the indicators, get those as well. And so this is how you do that, is you just go to kendallreport.com, indicators, and you go indicators 24. It'll resolve itself there. Just sign up. You can get those very soon. I'm still hoping for the ability to get these data sheets out to you folks, and it's been just a complete frustrating hassle. So I know some of you, because I've said I'm going to have them out weeks ago, are frustrated. I'm even more frustrated, and I'm working on a solution here. It's just very, very frustrating. Is the way that that I built the models is part of the issues. So I'm trying to get that straightened out. So anyway, you do get them every night in the Substack for right now, and we'll continue to deliver at that. I've been actually considering automating and putting like a PDF out of top 50 traded items every night. So I'm working on some things to get some things out there. Anyway, thank you so much for watching. Thank you for all your comments and some great comments tonight. Really appreciate it. And we'll see you tomorrow night at the same time.